I'm here on the 1 hour chart. For Marathon Holdings, it's still quite popular, even though the structures are usually messy on these minor charts. There are 3 scenarios I'm tracking, which makes it difficult, but there are clear levels. So especially the orange scenario, I think, is quite likely, in which this was an A wave down. It looks like 5 waves down into the 2025 low. And we have something that looks like a 3-wave move up. Just that this last move up wasn't really long enough, but it can be a 3-wave move. So it would be an ABC structure in orange wave B, and then 5 waves down into the August low, my view, yeah. And so because of that, the pressure just isn't clearly up. So that means this could be wave 1 to the downside of wave C. I'm now tracking for a wave 2 rally, and then we could go lower like that. That gives me an A, B, C structure to the downside. So I have to prefer this scenario at the moment. It just means that the top might be in. But even in this scenario, I would like to see some further upside as part of the orange wave 2, potentially towards 1770, 1860, maybe even $20. If something more bullish unfolds from here, I mean, the move up looks corrective as well. If something more bullish unfolds, it might be the yellow scenario, in which we are then dealing with an ending diagonal in wave C. That's because this is a corrective base. It's all corrective. Last move up was in 3 waves. And then we can follow higher prices. For now, I follow higher prices in the short term, right? But it's just not clearly very bullish. Just from a risk management point of view, I just think we have to prefer the orange count for now. That doesn't mean it's bearish right now. It seems to want to push a little higher. I have something that we could call maybe here a 1-2 pattern, and then it goes higher like that in the orange scenario in wave C of 2. And we can also add Fibonacci extensions. So if I measure the length of the A wave and go to the low of the B wave, this gives me a standard target area for the C wave. That being said, once we break below 1450, that wave 2 might have topped. Yeah. So 1730 to 1880 is an additional area of interest, an additional target area, which this C wave could reach. So short term, higher prices. I'm not going to rule out that the yellow scenario is going to take the lead for higher prices. The minor charts are just very, very unreliable, and they can change their opinion quite quickly. But you can still use the levels here for orientation, and just be aware that in this area, there might be a rejection.